Hello guys, welcome to Solid as a Stock. Hopefully obvious what we're going to cover. We're going to be looking at stocks today. Now for those of you that haven't joined us on these sessions before, just to introduce myself, my name is Becky. My email address is down here. It's becky@traddictiv.com. There's also support@traddictiv.com, so you can email us if you have questions, if you're watching this recorded and you have questions, or if you're watching it live but you think about questions after the fact, of course by all means you can email us. I will show you a different place that you can go to post questions as well in a second, but before we do that, let's just make sure that we cover disclaimers. So there they are, top left hand corner. Please read them, not just for legal reasons, but also to understand what you can expect from these kind of videos. Now I've got chat boxes open around me, so if you see me looking around, that's what I'm doing. I'm looking at the different chat boxes and just checking that everyone's on board, seeing if anyone's got any questions. If you are watching live, please do ask questions. I do prefer it. It just means that, of course, we make sure that these sessions are tailored towards you and towards what you need and what you're confused about, and answer your questions and things like that. Now, just to quickly explain the agenda. So what we'll do is we'll look at basically trades we've placed before, what happened to them, did they win or lose, or did we cancel them, did they break even, are there any open positions and what are we going to do to those, what new opportunities do we have, and we'll look at the current market environment and talk through things like that as well. And again, I'm here to answer your questions if you have them. Now, we are streaming in different places at the same time. So we are on Facebook and YouTube and Twitch and our closed coaching community. We're everywhere all at the same time. Obviously, a lot of those platforms are free platforms, but the closed coaching community, people pay a monthly fee, small monthly fee, to have access to basically more of our time inside that closed coaching community. So what we do, around about the halfway mark, and usually what that means is at least one trade is placed, we will cut the stream to the free platforms and continue within the closed coaching platform or the closed coaching area. So hopefully that makes sense. So around about the half an hour mark as well, we'll cut this stream. Okay, so again, let me know if you have any questions, but otherwise let's dive in. Now, firstly, just want to highlight this, which is tradewithufos.com/Becky. You can use this link in order to get apps and platforms. You can book one-on-one coaching, and you can also come down here and post questions in this sort of general public area, which is great because it enables us to answer questions on that area, which is good for everybody. It means that we all learn from this place. So let's do first thing first and have a look at the trades that we've placed before, trades that we had that were still waiting or that were still on from the last few sessions. So this was Methanex Corporation. I'm going to call it Meow because that's kind of how you would read that. And in this one, we had a break-even trade. So we placed the trade on the 29th of October, which was a couple of sessions ago. It's triggered here, which was later on that day, came up, hit our T1, so hit our first target, which is a break-even strategy. So it's the same away. So if this is 1, then this is 1. So it's a 1-to-1 target from what we risk. If we hit that one and don't hit the other one, we break even. And that's exactly what happened. We hit our first target and then it came back against us and stopped us out eventually over here, sort of late November. So we overall on that one had a break-even trade. So that was that one. So break-even on Meow. Then had PBA. I think this one was a losing trade. Yep, so we had a losing trade very, very close to being break-even, unfortunately. So we triggered here. So again, 29th of October roughly is when we placed it and then when we got in. It sort of went a little bit in our favour, back against us, a little bit in our favour, really close to hitting our first target, but it didn't, unfortunately, in the end, and came back against us. So overall, losing trade on that one, PBA, Pembina Pipeline Corporation. Now, of course, bear in mind the stock markets as a whole have taken a bit of a hit recently. Not too much compared to what we've seen in the past, of course, but have taken a hit. So a lot of our stocks have gone with them. This is why we tend to try and look at what the market is doing as a whole and follow that with our individual stock trades. But it's okay, it happens. We have losing trades, we have break-even trades, we have winning trades. Just is what it is. As long as overall it balances out that we make money, we're okay. So this is VG Vonage or Vonage Holdings. On this one, it has kind of gone against what the general markets have been doing, and it's gone up. If you were to have risked $100 on this trade, which is the example that we give, you'd have already banked $50 and be up $482.56 at the moment on top of that. So overall, what, $530-ish of profit. So 5 to 1-ish so far. So on this one, we placed it on the 29th. We triggered, I think, again on the 29th. It hit our first target early November, and it gapped up for us there, and is now sort of floating somewhere in our in profit. Now what we want to do now, so this was a 3-day chart that we used. What we want to do now is manage this trade. So what I'm going to do, because we always use the data that comes from top, I'm going to open top and go to that stock. So it was VG. So if one were to be in this trade, we have this new UFO that's formed here. It's a 3-day chart that we have on the right. There's a new UFO that's formed here. The numbers for that are 17.33 to 16.26. We're going to take off 10 cents from that last number, which will be now 16.16. That's going to be our new stop. So we've trailed our stop behind price moving in our favour. So what we'll do is I'm just going to take this red line and we're going to put 16.16, and that is now our new stop. Okay, so our stop loss, and you would move this on your platform, whatever you're with. If you're using TradeStation or whatever, you would obviously move it, not just the line on the chart, but you would move the actual stop to a different place. I won't do that because for the purposes of example, hopefully it's clear what you would do, but we're moving our stop to move behind the new UFO and lock in profit as we go. It would be unfortunate if this came all the way back against us and stopped us out here. It would mean that we'd profit maybe $60, $70, which wouldn't be great if you at one point could have been profiting 500. So perhaps you can go down to smaller time frames to trail your UFO, or hopefully this continues up and we trail it that way. So far we're in profit on one, we lost one, and we had a break even on another one. So kind of 1 for 1 on each of those possibilities. Now looking onto more recent stock trades that we've placed, I think we've got a loss, 2 losses in an open trade. So this one was KRG, Kite Realty Group. Again, this would have triggered on the, I think this would have been the 22nd-ish of November, or 25th perhaps of November. Let's have a look. So it triggered on the 22, 23, 24, 25. Yep, so 25th of November. We still would have had the EMA in our UFO. We may have cancelled it if we'd have been on this, but unlikely. I would think it would be more likely, it would have been on a smaller time frame here, would have been more likely, as we can see here, it gapped down and opened that day on the 25th, 26th. It opened that day. Oh yeah, because it was Thanksgiving, wasn't it? So it would have been the 26th. So it would have gapped down and opened at our entry on that day. So if we were watching it, perhaps we would have cancelled it because we would have seen a change in the climate, but pretty quickly it would have stopped us out. So I'm going to assume this was a loss. Let's assume the worst in this one. So a loss on that trade. Then we had POR, Portland General Electric. Yep, there you go. So this is open at the moment. Nothing really much to do with this. It's already in, it's already there. We placed the trade on the 12th of November. It would have triggered, I think, around about the 15th, 16th of November. Come nearly to our T1, not quite hit it, come back against us, and then come back out again. So at the moment, everything is still in line to be in this trade, and just wait and see what happens. If the climate changes, we'll get out of the trade, but for the time being, everything is good to still see what happens with this one. And then the last trade that we put on was Cura, how do you say that? Unicure. So in this one, we would have had, unfortunately, it would have been a stop out. Now, you're seeing here on the day that it triggered, it was the 12th of November. So it was still within a thick blue dot. So still within probability upwards. The EMA was still inside it. Everything was lining up. That was a Friday that it would have triggered. By the following Monday, when the markets opened, I think we still had, in fact we can check it, we still had a thick blue dot on the 15th. Yeah, still had a thick blue dot on the 15th, so we wouldn't have cancelled it, and that's when it stopped us out. So unfortunate, but overall stop out on this one as well. Okay, so that's all of the trades that we've placed so far, and whether or not they won or lost or how we would manage them. Let's now move in to look at some new opportunities. Now, something to be aware of before we do this is news that might come out and get in our way. So we are going to filter by US markets and by high impact news. I'm going to apply that filter. We are going to have a look at the next week, so the 3rd till the 10th, so the next 7 days-ish of news. Why are we doing this? Now, we don't necessarily care what the news is. We don't make decisions on our trades based on what the news is. No, for us anyway. Some of you might, and that's okay. For us, we don't. We tend to be more technical traders. But why are we looking at the news then? We're looking at the news because we want to know if we have some scheduled news reports that are likely to have a high impact on the markets and therefore increase volatility, which could increase risk. So for the time being, we actually have nothing until next Friday to be aware of in terms of scheduled reports. Of course, we all know things can happen that aren't scheduled, that throw spanners in the works, but for the time being, nothing on that. Then what we want to do is look at what the overall market is doing. So let's have a look at the S&P 500. We're looking at the ES, which is the futures contract for it, but looking at pretty much the same thing. On a weekly chart, we have an unconfirmed climate on the ES, which tells us that the market doesn't know what it's doing. Not surprising, we had sort of decent move to the upside, bit of a pause, decent move to the upside, we're now having a bit of a pause. It might go up from here, it might come down from here, we don't know, the climate doesn't know, the market doesn't know. So what that means is we don't need to be looking for stocks that have probability up or probability down. We can look at either one and look at what those individual stocks have in terms of probability. Normally, we'd ideally be looking at if the market as a whole had a thick blue dot, so probability upwards, we would be looking for individual stocks that also have probability upwards. If it was a thick red dot, so probability downwards, we'd also look for individual stocks that has probability downwards, but we actually have a thin dot, not enough probability either way, so let's look at both. Hopefully that makes sense. By the way, I'm keeping my eye on the chat box, that's why I'm looking side to side. If you guys have specific stocks that you want me to look at, or specific timeframes you want me to look at, by all means let me know on that as well. Okay, so what I'm going to do is let's go to our matrix, which is essentially our scanner tool on top. We are looking at all stock symbols. We are looking at US stocks as a whole, stocks and ETFs. I'm going to take out the max price. So minimum price of $20. You can have that lower if you want. It could be $15 or something like that. I would err away from, oh, that was weird, that updated there. I would err away from stocks that might be, I don't know, like $1, $2 or less than that, because you're kind of getting into the penny share situation. And if you get into penny shares, there's less volume. They tend to be more volatile. That can be a good thing if you're on the right side of it, but it can be quite a bad thing if you're on the wrong side of it. So we'll stick to slightly higher priced stocks just because they'll tend to have more volume and more institutional interest as well. We are going to filter with our earnings. It's already ticked here. We want to exclude stocks that have earnings within the next 5 days, so within the next week or so. We don't want to be trading stocks that have earnings coming out soon. And let's start with looking for a confirmed upwards climate. If we can't find anything here, we'll look for a confirmed downwards climate. So we'll click scan, and we have this big long list of potential stocks that we could be looking at. Now, if we want to filter this down and have perhaps a lower list, perhaps we put in a max price. We have a slightly smaller list, but pretty much the same. You could increase your minimum price. And again, cut down on that, slightly smaller list. To be honest, it didn't make that much of a difference, so let's do what we were doing anyway and do $15 as a minimum price, no maximum price. Filtered out stocks that have earnings coming out in the next 5 days and that have probability to the upside. That's what we're looking at for the time being. I'm going to filter it by symbol. And what we're going to do, especially for those of you that follow us regularly, you you would have seen me do this before. For those of you where this might be the first session you've ever watched, apologies if this might be a little bit quick, or you might not understand why we're flicking between different time frames. If you look at my more recent stocks sessions that you can find on our YouTube channel, and I explain why we do it this way. So what we'll do is we will look at each of these stocks one by one. We're having the weekly, so let's start with this first one. Weekly on the left hand side, and we're going to look at different time frames on the right hand side. We're going to cycle through 3 or 4 time frames until we find a good setup. We might not find a good setup, in which case we go on to the next stock. And we do that so that we can have more opportunity, but we can also use this number in the top right hand corner to help us increase our probabilities as well. That number essentially shows us the probability of these UFOs working, which is the app that we use to help us decide where to buy and sell. So let's start with this one. Now we have, so this is Akamai Technologies. Price is pretty much exactly where the EMA price is at. As a very quick summary, we always want to be trading when we have clear probabilities either up or down. If it's up, we buy. If it's down, we sell. We get that from the climate, and we've filtered by stocks that do have probability up in this case. We also want to trade. If we're buying, we want to buy green UFOs, so between these two prices, if the EMA value falls within it. So considering price is very close to the EMA, we would have to find a UFO that's very, very close to price as well. So the EMA value is exactly 109.69. So we are trying to find a UFO on the right hand side that envelops that. So 109.69, very, very close to current price. I doubt we'll find something. And I'm flicking through quickly just to see if we find something, and we haven't, so no problem. We'll go through them. I'm going to go through this quickly until I find one so that I can show you in more depth rather than spend ages just cycling through if it doesn't quite make sense and we don't understand what we're doing. So we're looking at the moment for a UFO that coincides with the number 26.37, so 26.37. Let's take a look. Brilliant, we have one. So I was looking firstly at the 144 minute. There was nothing here, as in no UFOs that coincided with this number, 26.37, but we have one on the daily chart. Now what I'm going to do is I'm just going to look at the other 2 time frames and see if we have a better number up here. So on a daily chart, the UFOs have a 57.94% probability of working, defined by how much they move or how often they move between buyers and sellers. So on the 1 day, we have, call it 57%. On the 2 day, we don't have a UFO that coincides, so it doesn't matter anyway. And on the 3 day, we also don't have a UFO that coincides. So we'll go back to the 1 day chart and we will get cracking with this opportunity here, which is the Air Transport Group, Services Group, ATSG. That's the trade that we'll be putting on. Yes, we will look at Rivian Auto. Thank you for that, Gaurav. If you could send me or if you could let me know the symbol, so it's easier for me to find it, that would be great. So if you can put that in the chat box, the symbol for that, and I'll have a look at it. Whilst you do that, we'll place this trade on ATSG. Okay, so let's bring up TradingView. I like to use TradingView just because it's, I think, visually easier to follow. It's what more people are used to using, and it's got good sort of inbuilt calculators and things, so I don't have to do maths. So the numbers, I should have done this first. We're going to use this UFO here. It's a little bit of a big one, but not too bad. So today is the 3rd of December. I am just putting this on my spreadsheet here so we can see what we're looking at. Also, I can remember what I'm looking at. ATSG, it would be a long trade. Entry is 26.39. Stop loss will be 24.65 minus 10 cents. So it's 24.55. Our final target, this might not work out. Let's have a look. It's 27.85. 27.85. That may not work out. So let's have a quick look and see what what happens there. So entry was 26.39, and the stop loss is 24.55. the final target 27.85. Oh, okay, we can't place this trade. Let me just explain why. We want our final target, the second target, the further away target, to be at least 1 to 1 away. Otherwise, it's kind of no point placing the trade. If you're not going to take at least the same amount of money off the table if you profit as what you'd lose if you lost, there's kind of no point in placing it. So this is a 0.79 to 1. So we don't place the trade. We're strict on that because there's really no point in placing trades that don't have good enough probability to get decent reward out of it. And in this case, we don't have that opportunity. So in which case, let's go to our suggestions. Shame that one didn't work out. We were very close, but rules are rules. And we will have a look at Rivian Auto. So RIVN. Thank you very much, by the way, for the symbol there. That was helpful. Okay, so I assume from the look of this here that this is a new company, which means it doesn't have data on the weekly yet. Let's see if we can have a look at the daily. We might have to do maybe a day trade on this one using smaller time frames, just because if it's not been around long enough, it won't have data yet. It won't have enough data points in order to have a statistical probability one way or the other. So what we'll look at is, let's go down to maybe a 4 hour. There you go. So on a 4 hour chart, we have some probabilities here, or some statistics. So what we'll do then, if it's a 4 hour chart on the left, we will use a 21-minute chart on the right. So hopefully that makes sense. So you're looking at dailies there. Is that daily on the left hand side? I'm just reading on the chat box there. So it says to look at it on the daily. Because there aren't enough data points on the daily, we don't have any probabilities as to whether or not it's likely to go up or down, because AutoClimate doesn't have enough data points to do the maths. So for me, I wouldn't want to trade something that I don't have statistical advantage on. Okay, so 4 hours also okay. Brilliant. Lovely. So we'll do 4 hour on the left. Sorry, 4 hour on the left. And 21-minute on the right. So we have probability up on Rivian at the moment on the 4 hour chart. We don't have any UFOs close by for quite a while. What we could do is, again, play about with some different time frames and see if we can find something that works. So this is the 30-minute time frame on the right, and then we'll go up to the 1 hour on the right as well. So 101.91 or 0.93 now, that's the there you go. So if you see that, so 101.9493, that's the current EMA, which is between UFOs. Now, as price comes down, the EMA will likely go down. So I say we pick this UFO, which is the second one down, because it's definitely not going to fit in. The EMA is not going to move up into this one if price moves down, because the EMA follows price. So as price comes down and the EMA comes down, it's likely, if they move down, of course, it's likely that they meet in this one. So let's have a look at what that trade would look like. So this is RIVN. Thank you for the suggestion, by the way. RIVN. So the entry will be 101.86. So again, this first number on this second UFO. The stop loss will be 101.31 because we've taken 10 cents off of this one. And the final target will be 104.48, which, if my maths aren't as bad as I think they are, we've got some room there to take some profit out of this. So let's bring this up on TradingView. RIVN. RIVN, and again we're going to go 4 hour and then 1 hour. Now, just to quickly give a caveat here as to the cycling through timeframes thing, because you may think, why are you doing that? Why don't you have set timeframes that you're looking at? Is that 1 hour? Maybe a 1 minute. Oh, that's a 1 minute. Okay. Bear with me. That's a 1 minute chart. We don't want to be trading on a 1 minute chart. We can. Let's try the 15. See if we have something there. So just to explain quickly while I'm cycling through time frames here. The reason why I'm using different time frames is because ultimately we're making a decision on whether or not we buy and sell off of a bigger time frame. The bigger the time frame, the higher the probability, or the more likely it is to be accurate. So we've got probabilities coming from the left-hand side, we use the smaller time frame to just help us be more specific with our entry so that we can have an idea of exactly where we're going to buy and sell. So if we've got an idea of exactly where we're going to buy and sell, then it doesn't really matter what time frame it is, as long as it's smaller than the one on the left. It's just helping us be a little bit more specific, a little bit more sort of robust on this. Now, okay, saying that, here's my problem with this setup, is that the difference between the 4-hour chart and the 1-minute chart is a big, big difference. Yes, we can cycle through different time frames as long as it's smaller, as long as the one on the right, which is the one that helps us be specific on our entries, is smaller than the one on the left, which is the one that helps us decide whether or not to buy or sell. As long as the one on the right is smaller than the one on the left, great. However, to me, it still needs to be within a reasonable range, and to me, to go from 4 hours right the way down to 1 minute is a very tight range. So I'll tell you what we'll do. Let's look at what the hourly is telling us, and perhaps even look at what the 30-minute is telling us. So 30-minute is telling us probability down. The 1 hour is telling us probability up. So I would say if the 1 hour is telling us probability up, then we can use this 1 minute chart, or maybe even a 5-minute chart, to help us figure out where we might buy. Now it's 102.73 is where the EMA is on the, looking at 1 minute chart again, sorry. So in which case, I'm really sorry that I've been jumping around onto different time frames here and it's probably confusing. So just, we'll draw a line and let's have a look at what we're having a look at. We are looking at a 60-minute chart on the left-hand side. If we're going to be using small time frames on the right-hand side, then we need to make sure that the one on the left is not so far away, because then it's just less relevant. The one on the right needs to be smaller than the one on the left. It doesn't matter so much exactly what time frame that is, but we want to make sure that it's not too far away. So, considering we have UFOs closer to us on the 5-minute, this is going to be a daily trade that we're going to do, or a day trade that we're going to do. Then we're going to be using the 60-minute here for our left-hand side and our decision making. So on the left-hand side, we have a thick red dot, which is probability down. We have an EMA at 107.80, which is not actually falling within any of our UFOs at the moment. We can check different time frames, see if we have anything there. So 107.80 is around about here. I would say, considering price is here, as price moves up, so too will the EMA, in which case we're likely to have something coincide here. So we're going short on this one, Rivian, and we're going short on daily time frames, or on a day trade. We are going short on a day trade, which means we have 60-minute chart on the left, 10-minute chart on the right. This chart could be any number. It could be the 8-minute chart, it could be the 5-minute chart, as long as you have a setup that coincides and it's around about relative. If you're using a monthly chart to decide what you're going to do, buy or sell, and then you're using a 20-minute chart for your entries, it's so much smaller than what your decision-making time frame was, and is therefore less relevant. So in this case, at least they're close enough to each other. So I know I've jumped around a bit, and apologies for that. Part of that is my fault, because when I typed in 1, thinking I was looking at the 1 hour, it was the 1 minute, and that's my bad for not understanding that when I typed it in. But hopefully we're now on board and it's all making sense. So let's have a look at Rivian. By the way, when I was doing this, I was looking for where our second target will be. We don't have one, which is absolutely fine. We'll just have a trailing stop. So Rivian, we have a 1 hour on the left. This is what happens when you use different platforms, because of course typing 1 hour onto TradingView brings up a 1 hour chart, but if you type 1 in any case into top, then it obviously comes up with different numbers. So this is a short trade. Entry is 108.33, stop loss 112.40, and our T2 is going to be trailing. So let's bring this up and get that done. So our sell is 108.33, stop loss at 112.40, 108.40. Our risk is going to be 50 bucks because we're going to place 2 trades. So our first risk, or our first risk is going to be 50 bucks. The second risk will be 50 bucks. Overall $100 risk. We do that just because it's a nice easy round number. It's not for any other reason. It's not because we want to tell you guys what you should be risking or anything like that. It's just a nice easy round number, as I said. I'm just drawing this on the chart so we can see nicely. I'm just going to swap these over. 12.40. Cool, just drawing it on the chart just so it's easy to see and we know what we're doing next time. And I'm going to put where our first target will be, which is 104.26. There we go. So that's the first lot in. And the second target is going to be, so 108.33, same entry. Stop loss, same, 112.40. Risk, 50 bucks, same as the other one. In this case, we're not going to take profit. We're going to leave that unchecked because it's going to be a trailing stop. So as price moves down, if it goes in our favour, then we move our stop along with it and lock in price as we go, lock in profit as we go. So this was placed on the 3rd of December. Placed 3rd December, day trade, 1 hour, 10 minute. T2 trading. There we go. So sorry I jumped about, but hopefully that's made sense as to what timeframes we've used, what we're doing here. We are doing a short trade as a day trade. We've got an hourly chart on the left, 10-minute chart on the right. We placed this trade because the UFO that we were using, we bring it back up here, the UFO that we're using coincides with the EMA value, or is likely to coincide with the EMA value as it moves towards our UFO, if price does move up. If price continues to go down, then we cancel the trade. But if it does come up, likely that the EMA moves up too, and coincides where we want it to coincide, and we take this trade to the short side. Bear in mind with very short trades, or very sort of shorter term trades, especially on stocks, make sure that you cancel the trade by the end of the day, because you don't want it to gap against you over the weekend, or you don't want to risk being filled completely away from what you want to be filled at because of gaps. So make sure that you cancel the trade if it hasn't triggered yet, or you stop it and you get out of the trade and close it if it is already in by the end of the day, definitely by the end of the week. So hopefully that makes sense. We also have plug, P-L-U-G. So let's have a look at this and let's try and go back to the bigger time frames if we can. I prefer to look at bigger time frames. Brilliant, we've got plug up here too, lovely. Prefer to look at bigger time frames on stocks, and the only reason for that is because we have gaps nearly every day, especially over the weekend. The bigger the time frames, the less of a problem those gaps are. The smaller the time frames, which means the smaller these UFOs, then the more of a problem we have if we have gaps, because it's more likely to jump over our stop, and then we're risking more than we want to risk. Right, on the weekly on plug, we have a situation where the EMA has been crossed by price, which means we're not going to find a buy UFO around there because all the buyers are gone because sellers have just pushed price down. So let's have a look at the daily on plug. You did say daily initially actually, so this would hopefully help you there. So if we've got daily on the left, let's start with a 55-minute on the right and see if we've got a trade. So it looks like, by the way, looks like we do have a trade here. So we have thick red dot, probability down. We have an EMA that is just underneath a UFO. As price comes up, EMA 2 goes up, likely to coincide here. Now what I'm going to do is just take a look at different time frames, sort of near to the 55, see if we might get a better probability rate here. So we're going to look at the 60. Lower probability rate, so we're not happy with that. Let's look at the 120. Again, lower probability rate, or not a better probability rate. And let's look at the 240. Okay, so you'll notice that the probability rate didn't really change between them. So no problem. Let's look at the 144 and just see if that has anything. That's the best probability rate that we've had so far. However, not lining up with the EMA. So let's go back to our 55-minute chart. And on a 55-minute chart, we have a 49% probability. So let's have a look at this UFO here. Again, likely to line up if price moves up into it. So this is plug power. And let's have a look at what that looks like. And then we will go and cancel the stream or cut the stream to YouTube and things like that. I wanted to do a second trade for you guys. I normally do one trade, but I wanted to do a second trade just because I spent a bit of time jumping about being silly because I typed the wrong thing in, which wasted your guys' time. So I just wanted to make sure that you at least have 2 opportunities on different time frames, and hopefully gives it a bit more context and makes it make a little bit more sense. So we're going short on this one. We've got daily on the left hand side, 55-minute on the right. We're going short because it's a thick red dot, probability down. Our EMA value is 38.37, which is just underneath this UFO. So it's likely that if price were to move up, the EMA and UFO would be around about the same price. That's where we want to be selling in this case. If we're selling to get into the trade, we're going to buy to get out of it, either if we're wrong or if we're right. If we're right, then we hope to take the trade all the way down to the top of this UFO, this buy UFO at 28.27. So hopefully you're with me here. Let me bring this up and we will put it in. So again, if you're looking at daily charts when we're looking at stocks, just bear in mind with daily charts, similar to, so if you've got daily on the left, similar to what we were just talking about before, just be aware that the smaller the time frames, the more of a problem you may have. Sorry, 10.17, we're going to add 10 cents. The more of a problem that you may have when it comes to gaps. So if you have a gap overnight, then you've got a situation where you might be in a trade that moves against you and there's nothing you can do about it. It gaps against you and it goes, let me just move these over here. Let me see if I can get that on the, there you go. So if it were to, let's say it triggered you here before the end of today and you left that on, well, it could gap up here and then you've lost 3-4 times more than what you were willing to lose. The bigger the time frames, the less that's a problem. Still a problem, but the less that's a problem. So on daily charts on the left hand side and 55 on the right hand side, you've got less chance of a gap problem than the previous example that we just went through, which was a much shorter term trade. But still, I would say you might want to cancel it out by the end of the week, put it up again, put it on again on Monday, if it's still all lining up. If not, at least you're protecting yourself and helping yourself there. So entry is 38.46, stop loss is 39.27. We added 10 cents to our number there. Our first target is going to be 81. In this case, it says ticks or pips. We don't mean that. We mean cents, of course. So that means the target will be 37.65. So let's put $50 worth of risk on that. Click sell. And when it comes to the, so 38.46 again, same stop loss, same risk. When it comes to the profit for the second target, we know that that is going to be 28.27 based off of the bigger time frame UFO that we saw on top. So let me put that in as well so we see that. So that was 28.27. And I'm going to place a note on here. So this was placed on the 3rd of December. It's a daily 55-minute chart and nothing else to say because everything else was pretty straightforward. So thank you for those suggestions. And I know we kind of veered around a little bit there, but we placed 2 trades on different time frames, both of which are short, meaning we're selling to enter these positions. We've got one that was a swing trade where we have daily on the left hand side, 55 on the right hand side. We use the left hand side to tell us what we should be doing. If it's a thick red dot, we should be selling. If it's a thick blue dot, we should be buying. If it's a thin dot, we do nothing. We used the right hand side charts within a relative range, of course, to look at different time frames and see where we might find a setup where we have a UFO that coincides with an EMA. By doing that, we add probabilities to what we're doing, because what we're doing is we're saying, let's sell with other sellers in the context of a selling environment where we have an EMA, so where we have even more sellers that could be coming in at that price. That's why we placed that trade on both of these examples, just on different time frames. So we had one example that was a swing trade, one example that was a day trade, where we had the hourly on the left and the 10-minute on the right. Again, we can use slightly different time frames on the right, as long as we are using time frames that are smaller on the right than they are on the left and not too far away. We don't want to be using a weekly on the left and a 1 minute on the right. It's just way too far away from each other and not relevant enough. We want to keep them close enough together so that it makes sense. We give you guys a kind of set table of what it should be. So daily and either 55 or 60 minute, weekly and either 4 hour or 144. But like I said, it doesn't matter so much. What matters is that you find the setups and that you keep the probability. So hopefully that's made sense. Like I said, I know we meandered a little bit. Just to show you again, if you have questions, you're watching the recording or something, or you're thinking about it after the fact and you have questions, if you can go to this link and post them here, so it's tradewithufos.com/Becky. If you post them here, then I can answer them here, which means other people can learn from the questions that you have. It might be that some questions that you have are already answered with what we have here already, but ideally that's where you'd go. If not, you can email me. It's becky@traddictiv.com. For those of you that are in the closed coaching, bear with me. But for now, the rest of you that are watching in other platforms, I will cut the stream. Like I said, let me know if you have any questions. I know this might have been a confusing session. I made a couple of mistakes that might have made that worse there, but hopefully it made sense. Please let me know if you need me to clarify anything. Hopefully there were good examples and you understand why we place those trades. And next time we'll have a look at what happened with those trades, how we might have managed them. Did they win? Did they lose? Did they break even? And what we do with that. Hopefully you have a great weekend as well. Great end to your trading week, and I will see you next time. Those of you in the closed coaching, just bear with me a second whilst I cut the stream to the other places. Thank you as well for those on YouTube that have suggested things for us to look at and ask some questions. Always appreciated as well. Okay, take care. See you soon.